Today, I'm going to be talking to Shiv Gupta about what we can learn from the latest earnings release cycle in ad tech. Shiv has been in digital media a long time and previously had sales roles at ad.com, AOL, and Criteo. And for the last 7 years, he's been working as the founder and CEO of the U of Digital that offers professional coaching and training around all aspects of ad tech and digital media. Most relevant for today's discussion is that he publishes a newsletter on key trends in the industry, and he's been publishing observations as announcements are made in the earnings cycle. One piece of context that I'll give, given the rapidly evolving economic cycle in the US, is that we're recording this on May 16, and the big news from this last week was a 90-day reduction in the tariffs between the US and China. And that has caused a broad market rally. With that as context, Shiv, I'm so happy that we're able to talk today.
Yeah, thrilled to be here, James. Thanks for having me.
Excellent. Now, Shiv, I want to get into some of the themes that we're seeing, but for those that don't read your newsletter yet, can you ground us in what's been happening the last few weeks in the earnings cycle? Who's surprised on the upside and who missed?
Yeah, absolutely. So, I think the earnings cycle for Q1 has been pretty interesting to monitor. I think, coming into it, everyone was feeling skittish for a few reasons. One, Q4 was a little soft across the board. And, people obviously kind of look at the last quarter and remember the most recent quarter as kind of like a indicator of what will happen, in the next quarter. And so I think people were a little skittish about what would happen in Q1. And so I think people were nicely surprised to see that mostly across the board, things looked up. Google, or I should say Alphabet, Meta, earnings were positive for those guys. And Amazon, I think, was like the one that was a little bit kind of on the fence. But I think generally speaking, like it was good from the advertising standpoint, right? I think overall Amazon's running into some stuff, but overall it was okay. And I don't think the stock took much of a hit. But, if you look across the board, the DSPs, especially, Trade Desk, Viant, others, and then SSPs as well, PubMatic, Magnite, everyone kind of beat expectations for the most part. There were some outliers. I think some of the holdcos, holdcos are obviously a very different business than the tech companies. Not all holdcos are doing well. Publicis is doing well, but the other ones are quarter over quarter, they're running into challenges. And then, some of the legacy traditional media companies, the Paramounts of the world, et cetera, are still struggling. But overall, the advertising sector, the tech sector looked pretty healthy in Q1. And that was surprising to folks. So I think the market and the share prices of these stocks saw a big pop. And then also, one other thing to note is guidance for the rest of the year has been not great. And that is to be expected because, we're still in this kind of moment of uncertainty in terms of macroeconomics and tariffs and things like that. So that's kind of what we're seeing at a high level.
Got it. Just to drill into one area that you talked about some of the traditional cable companies that are now obviously doing CTV and streaming, Paramount, Warner Brothers, down year on year. It seems like there's not a lot of prospect for growth in these segments, and the market is more focused on whether they can increase their profitability. Would that be fair?
Yeah, I think that's right. I mean, these companies obviously have legacy businesses that are slowly bleeding out, in terms of linear and broadcast and cable. They're all doing their darn best to move into streaming and digital, obviously, but that's a tough category. And there's all sorts of new competitors in that category that they haven't dealt with before, right? It's Netflix, it's Disney Plus. I mean, I guess Disney you can put in both buckets, but it's Netflix, it's Roku, right? It's Amazon. And that market, the CTV market, is so fragmented, and it's hard to get market share, right? And so it's easy for us to sit here and say like, oh, well, they should just kind of move into streaming. Well, being a behemoth in linear and then just moving into streaming is not as easy as it seems. And so they have a tough road ahead in terms of profitability, to your point, growth, and just their financial outlook in general.
Another announcement from the last actually 2 days is that Microsoft is shutting down Xandr. Obviously, Xander's been around for a really long time in one form or another. Is this a slight positive for the rest of the ad tech companies that there's one less player in the space, or is it a negative in the sense that it's sort of reaffirmation of the fact that this is a tough space to play in?
I guess it's a little bit of both. In general, I think it's positive for the other players, right? Because to your point, one less competitor, one less big name kind of going after those budgets. And so, I think the trade desks, the Yahoos, the Amazons, the Googles of the world saw that news yesterday and, had a little mini celebration of like, okay, cool, let's go after these customers. Let's get some of that budget into our DSP. I think on the flip side, to your point, the DSP business is hard, right? When a company like Microsoft is basically shutting down their DSP, that tells you a lot about the sector. And it's a low margin business. It's an extremely competitive business. I think the margins are getting compressed further and further and further. And so I think it's a tough road. And so, on one hand, yes, they should see a bit of a windfall of revenue coming from Microsoft and Xandr sunsetting their DSP. On the other hand, it's just kind of reaffirmation of like, this is a tough ride. I think what we're going to see is like the rich get richer, right? So I'd say the big three, the big four in the DSP sector will grab a lot of that money that Xandr is, pushing out, because Xandr, if you think about it, it was more of an enterprise DSP. It was working with bigger customers. It wasn't working with mid and long tail. And so I think some of the mid and long tail DSPs will probably not see the upside of it. And I do think we're going to see more consolidation in the DSP category, looking forward a year from now, 2 years from now, where companies didn't necessarily see the benefit and the rich just got richer.
Yeah. When you look at earnings, and you've already touched on this briefly, it's a reflection of both what happened in the last quarter and also sort of guidance on what is going to happen for the rest of the year. And you mentioned there hasn't been a lot of guidance, but what did you read in the announcements in terms of expectations going forward for the rest of the year?
Yeah, so I think guidance is, being frozen or being cut by a lot of these companies, again, because of uncertainty and the macroeconomic climate. I think that Q2 has been soft already. Like we're hearing that Q2 has been soft across the board for a lot of companies. Q1, we were kind of riding a wave from Q4 into Q1. People were kind of pumped, I think, about the new administration, and how it's going to be pro economy and, pro business. And I think people were riding high from that. And then all of a sudden, everyone got hit with this hammer of tariffs. And so Q2 has been soft. I think the guidance that you're seeing is a reflection of Q2 having a soft start. And so I think, we're going to have the same conversation in 3 months and say like, Q2 didn't look so good. And I think a lot of these stock prices are probably going to get hit from that. But I think, the big picture is important here. If things are stabilizing like we've seen in the last couple of weeks, the tariff, between China and the US has been cut down or frozen. I forget exactly the specifics there. But I think, the big picture hopefully is that if the tariff thing kind of goes away, which is not, something that we can fully expect to happen, but if it does kind of go away, like we should be on the right track. We should be up and to the right. And so while Q2 may not look great and may hurt the 2025 outlook for a lot of companies, hopefully by the time Q3 and Q4 roll around, we're kind of like where we were in Q1.
So this is the Yield Doctor podcast, so I have to ask about pricing and demand dynamics. And to some extent, you're already creating the right bridge for me talking about Q1 into Q2. I think one of the interesting questions is always, is sort of media spend a leading indicator of the state of the economy or a lagging one? I'm currently seeing that in the face of a lot of this uncertainty, people are holding back budgets. But if we have entered a period of some stability and there is more certainty around tariffs, how long do you expect the lag to be between that playing out and, okay, we're in a better environment and budget starting to come back and the media industry broadly being in a healthier place?
Yeah, it's a really interesting question. I mean, I think it depends on a lot of factors. You can look at kind of legacy, how media has reacted in the past. And I think there is usually a bit, I think the industry reacts quicker when it's on the downswing, right? To your point, and I think it reacts a little bit slower to get going again. I think it depends. The lag time will depend on some other factors, right? So it's obviously economic stuff, but it's also just like the what is the administration signaling around a bunch of stuff, right? So that's geopolitical things, right? That affects the economy. It's rates, that affects the economy. It's the deficit and how we're treating that. It's taxes, and also I think in general, it's like stability versus instability, right? I think like one of the big reasons why people are a little frozen right now, it's not 100% tariffs. It's more uncertainty and instability and kind of like how the administration is just kind of whiplashing back and forth between policy. And so I think what people want to see in the markets and in media is stability and like kind of, good, consistent decision making. And I don't know if we're going to get that at any point. And so I think the lag, could be slow in terms of kind of reactivating budgets.
Yeah. I was going to ask you a question of what is the top of the stack of things driving the behavior. And obviously the political sort of uncertainty, tariffs is in the top one or two. So my question, I'll pivot and ask you, aside from tariffs, what is the other thing that seems to be driving expectations around valuation? Is it the impact of AI? Is it privacy regulation? Is it potential consolidation? So other than tariffs, what's the big story right now?
Yeah, I mean, it's all those things for sure. I think those things are not like as immediately impactful on the market. I feel like the market's priced in, like, AI is changing the world. And so, the market's kind of priced some of that stuff in. I think where more like whiplash happens and reactionary kind of behavior happens is honestly rates, like Fed rates. Like we see this all the time. Anytime the Fed says anything in terms of rates, that pushes the market up or down significantly. And I think long term, people want to see rates come down, right? And if rates come down, money gets cheaper, capital is cheaper, it's easier to invest, and the economy starts moving, right? And so obviously you have to balance that with inflation, and inflation is still in a little bit of a tricky spot, and so the Fed is going to do the right things to manage those two variables. But I think rates, right? Like the market positively reacts to interest rates.
Okay. So a lot of what we've talked about is sort of your observations around what's happening. Now I'm going to push you on an opinion.
Okay.
If you had to summarize your own sentiment or outlook on the market for the next sort of 6 months, or really for the rest of 2025, are you relatively bullish or bearish on the outlook for ad tech and sort of digital media broadly?
I'm bullish. I'm always bullish, but I'm particularly bullish right now. I think there's a bunch of interesting stuff going on in terms of antitrust, right? Like the antitrust thing is real. It's gonna, if executed properly, everybody will win from that. Of course, there's no guarantee it'll be executed properly, but let's see. I think that's a positive thing. I think the AI kind of revolution is going to be extremely positive and create tons of efficiency. There's obviously going to be some short-term pain in terms of employment and layoffs and things like that, but I think it's going to tremendously improve the efficiency of the industry and just like the innovation that we're like, that exists in the space. I think, it's interesting to be in this moment and be like, wow, there's so much innovation right now. Because in every moment, right, you always feel that there's a lot of innovation, but looking back over the last 3 to 5, maybe 10 years, there actually hasn't been much innovation compared to what we're going through right now, right? So I think between antitrust, between the AI stuff, and there's a couple other things. I think also just between like kind of the acceleration of consumer behavior towards digital, the migration from streaming to or migration from traditional to digital, all those things, right? I think are kind of creating this melting pot of growth and excitement and a bull market for this industry specifically.
Shiv, thank you for taking the time. Really appreciate it. If people want to find you and more particularly get insights on a more regular basis, where do they find your newsletter? Where do they find you?
Yeah, absolutely. Please check us out. We are a training company for the media and marketing industries. We provide all sorts of cool training, and important training on critical topics like AI and, ad tech and martech. You can find us at www.uofdigital.com. You can follow us on social. We put out a ton of content on social media. Our newsletter, which you can access through our website, goes out every week. Every time there's an earnings cycle, we talk about the earnings, we summarize the earnings, we make it easy to digest what's going on with the financial health of the industry, and then we just make it easy to kind of digest, all the headlines in the space. So please check us out. We'd love to have your subscribers and your audience follow us.
I appreciate it, and I appreciate you. You and I only met, I think, for the first time in this last year, and I really appreciate the East Bay happy hour that you run and host. So thank you for that as well.
Absolutely. Another one coming up in 2 weeks, I think.
Excellent. Have a good rest of your day, Shiv. Thank you.